is the head of the workspace company IWG. He joins me now from Monaco. So great to see you. I was just looking at some of your numbers, your annual year financial performance, the highest numbers that you've seen in your 34-year history. And I guess there's fear that we will see a big shakeup, a crisis coming through in the commercial real estate space. But you're in the hybrid model, which is super fascinating. What are your projections right now of the risks on the horizon?
Well, look, it's a very uncertain economy. Tech is changing the way people work. People are adopting, and companies are adopting, hybrid working globally. It's a global phenomenon, and it will change real estate. Our own company is growing very quickly to meet demand as the more and more hybrid workers come into the workplace. And we expect this year to be another year of quite rapid growth as the market changes.
When I was just looking at some of the surveys that you've been conducting, and the data revealing that people are willing to give up a significant chunk of their salary to still work from home or to embark on this hybrid model. And then I wonder what that would actually do in terms of occupancy rates in commercial real estate, and where that's going to cause a big gap, and how that is being priced in.
Well, look, I don't think it's really, the change hasn't really been priced in yet. I mean, the change here is a geographic change. This isn't about people working from home or people coming to centralized offices in CBDs. This is about people working in a hybrid way. What they don't want to do is to commute. They see it as a waste of time, but they don't want to work at home. Most people want to work close to home and have a short commute. They want to leave home, have a break, work, and then come back home. And they also want to work with other people. Those people may be working for different companies, but they want the social interaction you get from working for an office. So look, the commercial real estate, the office is not dead. It's just changed its location, and is changing progressively as we move through 23 and 24.
With a weaker economy that has been basically priced in all over Europe and the US, we just don't know whether this is going to be a soft or hard landing, how deep a recession could possibly be. We don't know what the inflation outlook is ultimately going to be. We're worried about the banking sector and vulnerabilities that could still possibly exist. How does that play into what your projections are, what you're able to do at IWG, and whether you have to start being a little bit conservative with the uncertainty that's coming through?
Well, look, we absolutely agree that the economy is very uncertain. It's highly likely that we will see recessions in many of the countries we operate in. We operate in 120 countries around the world. So, they're all operating at a different pace. But what we're seeing amongst our customer base, amongst CEOs and finance directors, is they are looking for ways to save money. They're looking for ways to be more flexible. So they're also looking to adopt hybrid working because it's what their workforce wants. They can save about half their costs, and it also is really good for the planet. It reduces carbon footprint by about 70%. So that is also, that uncertainty is also forcing change.
Well, I think we've experienced so much change over the last few years, and it's still set to do so. Mark Dixon, thank you so very much.